Hi there, good morning. You've tuned into ET now, and this is bnsn now with me, Cheryl D'Souza. Along with me, I'll have Shishti Sharma join in just in a short while from now. We are back after a long weekend, so let me wish all of our viewers a very happy Holi. I know it was yesterday, didn't get a chance to greet all of you all then, but yes, the markets are actually painting the shade of red for itself, and that's because of the handover that we've actually got from the US markets as well. Remember, yesterday they were functional and there weren't great cues coming in for some of the Federal Reserve governors. So on back of that, you had the US market shut shop in the negative territory, and that's sort of the reflection that we are seeing back home as well. The advanced decline ratio is still tilted in the favor of the decline, despite us seeing a good recovery from the day's lowest point or opening lowest levels. Talking about Nifty Bank, that one is underperforming the benchmark indices at this point in time. You have the Nifty that is just trading above 22,000 as of now. Talking about the list of gainers, you have the Bajaj twins that are ruling the chart, Bajaj Finance as well as Bajaj Finserv. They are among the top gainers on the Nifty, while you have Coal India, BPCL, Adani Ports also following the suit. While on the flip side, if you look at the list of losers, then you have Power Grid that's seeing decline about 1.5%, Eicher Motors, DB's Laboratories, SBI Life, Maruti Suzuki, all of them are seeing decline. So that's the way how the markets are looking like at this point in time. But let's put the spotlight then on Sirma SGS. The entire electronic manufacturing space has been in focus of late. And today on the show, we are joined by Jasbir Singh Gujral, who's the MD at Sirma SGS. A very good morning to you, Mr. Gujral. Thank you so much for joining us on ET now. And let's talk about the industry in particular. The Indian EMS industry is estimated to grow at approximately over 35% CAGR. If you could tell us, what is the growth rate that we can expect from the company over the next couple of years, given that we've spoken about what industry is expecting?
You see, actually, in India, manufacturing for the first time has taken center stage. And in manufacturing, electronics takes the cake or it's at the head of the table. We expect this current growth to continue for at least several years, 3 to 4 years, 5 years from now. The rate of growth may vary 5% here and there, but it's not going to be below 25. It's going to be north of 25 only. And we expect that the short-term growth is being driven by the domestic demand, the made in India, the import substitution. And as the Indian companies integrate with the global supply chain, the long-term growth will be fueled by global demand coming into India, the servicing of the global demand from India. So the short term, it's the Indian demand plus the normal growth which is there in the exports for the companies which are catering to the export markets. And long term, I think the companies who can integrate with the global supply chains, they stand a good chance to continue this high trajectory growth level.
Right, just to add on that then, so what's the growth rate that we can expect for the company? Could I safely say north of 40% or any of the levels closer to that?
I think, yes, it should be around that percentage. We have grown for 3 years, consecutive years, we have grown upwards of 45%. And we expect the coming year also we should be growing at a same trajectory of 45% plus. And as I said earlier, 26 onwards, 25, 26 onwards, once the companies get integrated into the global supply chains, the growth momentum should be maintained. We are very confident of that.
Right. So if you could tell us which segments will lead the growth for your company going ahead, well, for the next couple of years in particular, I'm talking about not for the industry, but for Sirma SGS.
Main pillars of the growth story of the company thus far have been automotive, which is both combustion and EV, industrial, and consumer. These three verticals will continue to lead the pack in terms of growth rates. And the new verticals where the company has recently entered, like railways, so the absolute figures may be small, they will also grow. And one major growth area in the coming years would be the healthcare. Healthcare currently is a small portion of our revenues. It would be less than 10% of our revenues. Going forward, we believe it would cross the double-digit figure.
Right. If you tell us how is the volume and the growth in the high margin industrials, medical devices, magnetics, as well as in the telecom segment?
There's a secular growth in the order intake and the verticals of the growth, as I've already said. The margin profile of each vertical is different. Healthcare leads the pack with RFID, then comes the exports, then comes the industrial, followed by automotive, and followed by consumer. Consumer is at the lower end of the table. So as the company grows, the margin profile will also get stabilized, because in the initial year when the growth levels are very high, there's always a change in the mix of the various verticals, but they tend to stabilize over a period of time.
Let's take a dive look then when it comes to your company's numbers or financials. And when we look at the EBITDA margin over the last couple of years, there's actually been a decline in your EBITDA margins level over the years. If you tell us what are the margin levels that you are looking to maintain in FY26 and beyond going ahead?
The stable margin profile on a long-term basis should be 7.5 to 8. In the short term, it could be 7 to 7.5. Now, upwards of 8 would be a function of how much of my design and development efforts, which have long gestation period, bear fruit. As exports will get increased proportion of our revenues once, as I was saying, the companies integrate to the global supply chains, the margin profile should be on a conservative basis. We should say that 7.5 to 8%, around that time, between 7 and 8% should be sustainable with these high growth rates. What we monitor is what is the margin profile in each vertical, and each vertical has its own margin profile. And there we don't see significant pressure. Pressures are always there, but there is no significant pressure that we are seeing a huge depreciation in margins in verticals. So if the vertical margins are intact, the overall margins are a play on the composition of the sort of pie.
All right, then we wish you all the very best for that, Mr. Gujral, and also for the time to come ahead for Sirma SGS. Thank you so much for speaking to ET now to talk about or setting the context what's happening in the industry as well as for your company. Thank you so much once again for joining us on this leg of Buy Now, Sell Now, and that was the management of Sirma SGS. But let's move on and let's talk about the markets. Let's talk about the stock queries that all of you all are actually sending to us. We are joined by our experts today. We have Kush Bohra as well as Ashish Maheshwari, and a very good morning to you both, gentlemen. And before I come to that, let me just introduce to all of our viewers what they've got to do. Remember that this is a show where we get you answers for all of your stock related queries, viewers. So do send in all of your queries and the numbers that on the number that's flashing on your screen. Do remember each time you write to us, mention your name, the stock that you're looking to invest in, mention that name as well, mention the buy price, the quantity, as well as the time horizon. In that way, our experts who have joined with us will be able to help you better. And talking about the experts, once again, let me introduce Kush Bohra as well as Ashish Maheshwari on the show. Very good morning to you, Kush. Good morning to you as well, Ashish. And happy Holi to both of you all, since we were on a break yesterday, could not greet both of you all personally. So very happy Holi, and I hope both of you all had great times.
Well, a very happy Holi to you and to all the viewers. I mean, there isn't too much color on our face, so maybe not so great, but definitely a good time.
Definitely, but yes, I'm sure Ashish, you also had a great time. Did you gorge on good sweets?
Yes, in fact, with great difficulty, and as I was having show, I have to use a lot of scrub to clean my face. So had a great Holi, and maybe this year all our viewers have green color predominantly in their portfolio. This is my wish.
Absolutely. I hope the same for all of our viewers. But let's kick start then with all the queries that are already pouring in. And remember, we were on a long weekend. I'm sure everyone was waiting to come back and to actually give and ask all of their queries then. So the first one is coming in from Ron, who's writing to us from Mumbai. And this one is for you, Kush. He wants to know about Salzar technology and exchanging solutions. He wants to know whether it makes sense to invest in these companies and also of what sort of a price should he look at. Salzar Technologies, Electronics, off late we'll be getting a lot of queries on this counter, isn't it, Kush? So do you think is it advisable to go ahead and invest in this stock for the longer term, and what would be the right buy price for both Salzar as well as exchanging solutions? I'm not sure if you track that one.
So you're right. Exchanging solutions is not something that I track, very closely. So, perhaps we'll have to give that, a miss. But, as far as Salzar goes, you're right. We've actually been receiving quite a few queries. The stock's actually done fantastically well. However, on the daily setup, we're starting to see some volume tapering off and also some negative divergences. And also there is a gap at about the 780 level. So my suggestion is existing, investors can hold on to this one, but anyone who's looking for a fresh entry should wait up a little. I think 780 to 800 is the zone where, the accumulation can be done, going forward. The stock might see a bit of a dip going forward. So wait for that 780 to 800 kind of a level. As and when that comes around, it might be a good opportunity to start accumulating from those levels.
All right. Ashish, the next query that I have is coming in from Dr. PVN Rao, and he wants to know about Time Technoplast as well as Exicom Tele at current price for the longer term. Do you think these counters make sense for someone to look to invest in Time Technoplast? I'm not sure about Exicom Tele, but Time Technoplast, what's your view?
See, in fact, I have recommended Time Technoplus earlier also on your channel and your sister channel. This is surely a very good bet. Even if we see last quarterly numbers from 73 to 91 crores, this company did in previous quarter, and I'm expecting 100 crore plus profit. And again, their foray into composite-based cylinders, which is getting very good demand in green hydrogen as well as CNG carrying, is a game changer for the company. And it's not only Indian company; they have 10 other plants across the globe. So surely this is a company to watch. My target for Time Technoplast in this year is 300 rupees. So stay invested here.
Right. Okay. This one is coming from Satya then, and Kush, he wants to know if it makes sense for him to switch out of Grasim, where he's already making about 25% profit or so, and switch out of that to an Ambuja Cement for a period of 1 to 2 years, or do you think Heidelberg will be a better counter when you talk about an appreciation level?
Well, as far as switching from Grasim goes, my suggestion would be stay put. It's a good thing that, he's making a 25% profit on this. But there isn't, too much suggesting that the stock is perhaps, giving way or there's any structural change. Some consolidation, but, given the market texture, I think this is holding up rather well. So he could stay put in Grasim. But as far as, investing in Heidelberg or Ambuja goes, Heidelberg at the moment is a strict no-no. It's broken below the 200-day moving average after the ferocious fall that we've been seeing over the last couple of months. And, 185 is the next level that actually we'll watch for. Ambuja, on the other hand, is still, a decent enough positional bet. So if he wants to park some money in Ambuja, I think a fresh allocation towards Ambuja will make more sense. Heidelberg is an avoid. Ambuja, fresh allocation, yes. Grasim, you can continue to hold.
All right. One more, you're coming your way actually. Coach, this one has come from Brijo, and he has TCS 3690 call. And he's saying he's currently in a loss of about 10,000 or so. Should he continue to hold on to it for till expiry?
Week's expiry. A couple of reasons why he should actually move out of this and perhaps book the loss and exit. One, I think the margin impact will start playing up now. So he'll also have to start parking in more margin. While IT stocks do look reasonably, priced in terms of the support levels, TCS included, but I think I'm not sure if the next couple of days will be as eventful for him to sort of, come into a profit position. So my suggestion would be to exit at the moment. We can consider buying the call for, the next series, but I will wait for Monday for that to happen. Otherwise, he'll be incurring a lot of time value on that call as well.
All right, and before we slip into a break, here's a big programming note for all of our viewers. We are back with the latest edition of Times Now Summit, and over the years, Times Now Summit has been championing pertinent national agenda points where India's leadership, leading thinkers and national influencers come together to define the action plan for India's progress. Themed India Unstoppable this year, we will focus on charting India's remarkable journey and its increasing influence on the global stage. So join us on the 27th and the 28th of March in New Delhi and watch the who's who of the political corridors share their views. So do stay with us for all the highlights and all the action as the action begins here only on Times Network. Welcome back. You're watching Buy Now, Sell Now on ET Now. I have Shrishti also joining in right now. But let's continue taking your queries. Then this one is coming from Vivek and he wants to know about NBCC. 91 is the buy price. Kush, he's saying he's making profits. Should he continue to hold, accumulate or exit? What sort of a strategy do you have for him?
Oh, absolutely. Continue to hold. The good thing is that the buy price is significantly lower. The base that the stock formed was around 105, and we're seeing a revival from there on as well. He could continue to add more, but my suggestion would be to wait until the level of 120. Once that is taken out, the stock could gather more momentum, and that's when you could add more. So hold on to this one. If you do want a positional stop loss, then that comes in at about 105, the near-term support zone. So continue to hold, add more above 120.
All right, that's the take coming in on NBCC. But moving on then, and the next query that I have, Ashish, is coming in on two counters, that is HUDCO as well as JBM Auto. Swati wants to know that at this point in time, can she go ahead and make a fresh investment in any of these names? You need to unmute yourself.
Sorry. I think both the stocks looks good as far as HUDCO is concerned. After touching 225, we have seen good correction up to 170, but now again the stock is going up. In my view, PSUs will again lead whatever the reversal what we are witnessing. This can't sustain momentum until its PSU leads this rally. So again, HUDCOs and HAL kind of stocks will continue to drive this momentum. That's why I like HUDCO as such. In my view, it has potential to touch to 225 once again.
It's coming in from Sudeep. Actually, Sudeep has written to us repeatedly. He's writing to us from Mumbai. Ashish, this one is for you. He wants to know, for long-term investment in commercial real estate or the mall space, can one look at Phoenix Mills or, for the matter of fact, Nesco for a period of 3 to 5 years? Or do you advise that it would be better to look at any of the REITs if he wants to play this theme?
Yes, in fact, this will be an overall good sector because the way momentum is again building up in retail space and commercial space, both Phoenix Mill, Nesco, and Embassy REIT, these three which I like. I think Phoenix is going to do much better in coming time. And the way Embassy REIT has given return in last few months, this will be again a top pick from my side. And the sector overall looks good. So if you ask me priority wise, then Phoenix, Embassy, and Nesco, this will be 1, 2, 3.
All right, moving on then, and the next query that I have is coming in on NIIT. Padma Rao Kush wants to know that can he go ahead and buy NIIT at current market price, maybe for the next 1 year?
Well, from the setup perspective, I think it's a hold. Even if you look at it from multiple time frames, the stocks only rebounded from an oversold territory, but there hasn't been a follow through. So my suggestion would be to just put it on wait and watch list. We're watching at a level of 110. Once that is taken out, perhaps it could gather some more momentum. So for now, the idea would be to just wait and watch.
This one is coming in from a viewer, Shivanshu. He's writing to us from Delhi, and very interesting query that he has actually, Ashish. He has Zato. He's holding on, he bought it at 130 odd rupees. Wants to know whether till what price should he look to hold on to Zomato, and also should he look to get into DLF or Electro Green Tech. I'm not sure if he's asking whether he should exit out of Zomato and then look at these counters, or is he asking to look at these counters as a fresh investment opportunity?
So that all three stocks are good. If you ask me about Zomato, new generation tech companies, this is one of the best performer. So with Zomato, my target in short term will be 225. In fact, if you see, all brokerages have given buy recommendation on Zomato, and targets are above 200 rupees only. So Zomato is pick number one. As far as DLF is concerned, I think after whatever the correction we have seen in realty stocks and other particularly North India based realty sector, now again it is started picking up. So DLF is all set to touch for 1,000 rupee mark in coming months. So both these stocks here you can buy. And third is Electro Green Tech, always a good buy to add this stock in any decline, because the way buses orders are coming, JBM Auto and Electro Green Tech are going to be two major beneficiaries till the time Tata commercial vehicle demerger takes place. So stay invested in these stocks, or even can buy afresh.
All right, but once again coming to you, Ashish, this query is coming from Shanker and he wants to take on two counters. Firstly is fact, he's holding 150 shares and his buy price is 329 rupees, almost he has doubled his money in this counter, and he also has LIC Housing Finance, almost 470 shares from a price of 422 rupees, and a profit in both of these names, but good time to book out profits and rather make a move to some banking or railway name. What will be your advice?
Yes, this will be a prudent move because you have already made enough money. In fact, there's almost 900 rupees from there. Now it is into long hibernation period. We haven't seen those kind of momentum which were there in fertilizer sector, where the fact was leading from the front. So I think you can book profit in fact, along with LIC Housing Finance is also a stock after touching almost 670. This is showing some declining trend. So instead of this LIC Housing Finance, I'll prefer that you move to LIC, which can give you better returns after correction that we have seen. And instead of other stock, we can look at Aircon or RITES, which can give you better returns.
Kush, coming to you, this one's from Chandu. He's writing to us from Andhra Pradesh, and he has IRFC, about 1,100 odd shares of IRFC at an average price of 95 rupees per share. He wants to know what's the long-term target for this one. I'm unsure what is long-term for him, but what would be long-term for you, and what sort of target are you eyeing for that one?
Well, ideally, the way I look at long term is anywhere from 3 to 5 years and beyond. 1 year is more of an accounting long term, that even we consider. But other than that, 3 to 5 years is the kind of horizon that you should have if you're talking about long term. That's about as much time the business needs to show any kind of meaningful trend. But that said, from that time frame perspective, even if you look at a 12-month horizon, from here on, I think the stock could very well touch, the recent highs that it had made close to, those 190, 200 levels. So I think he should hold on to this one. His buy price is fairly low, and the stock, despite the fall, has shown some strength in terms of the revival. So I think he should continue to hold. 190 to 200 is the first level that I'll be looking at. Once that is taken out, 240 is the next level. So in the next, 12 to 18 months, the stock could reclaim the higher levels and perhaps move higher from there on as well.
Moving on to the next query, and once again, Ashish, coming to you, since you were talking about all these EV bus manufacturers. So Shaikh has a query on this one itself. Will it be worth investing in Electra Green Tech, JBM Auto or Gensol Engineering at this point in time amongst the three? What is your favorite pick, and how do you see them? Any targets that you look out for in any of these teams?
See, we have seen some correction already in Electra and JBM, Green Sol. I'll not like to comment, but these two stocks are in buying radar. And if we have seen JBM also from 2,400, it has corrected to 1,800. Like Electra also, we have seen correction. And in my view, it will be like at this price point, we should start gradually accumulating these stocks. Again, the reason is the kind of order books these companies are having, along with the kind of order book pipeline is there in this space. because more and more state governments and municipalities are ordering now EV buses instead of regular buses, and they are replenishing their whatever the fleet which was running on diesel with the EV buses. And this is the reason this particular sector will continue to do well. In fact, Tata Motors can be also added, and because slightly some delay is there or some time is there still in their demerger, but otherwise Tata Motor also hold potential in this space.
Right. This one is coming for you, Kush, and this is coming from our viewer, Naman Deora. He's writing to us from Kolkata, and he has a query on two counters. One is EPL, about 1,200 shares at an average price of 203 rupees per share. The other one is Andra Cements that he's purchased at the levels of 126 rupees per share. He wants to know whether he should hold on to these counters or look to exit. His time horizon is till August end.
That's a very specific time horizon. Good to know that there's that clarity. Well, both these stocks unfortunately have actually seen a longish bit of a downturn. EPL approaching the near term support zones of 175, 178. If that is taken out, I think he should for sure exit out of this. There could be some revival on account of let's say an oversold territory and a dead cat bounce, but I think 178 is a strong stop loss. If that is taken out, he must exit out of this. Andhra Cements too, in fact this one's broken below its key support zones and deep into oversold territory. So here too, all that we are seeing is a dead cat bounce from that 82 level to just about 84. Both these stocks have been under a pressure even before the market started cracking. So an exit, however painful, is actually perhaps a better strategy, for both these stocks.
Right, moving on to the next one, and Kush, what will be your take on Spandana Spurti? Because we did see that after October 2023, the stock did give a breakout, but once again back to those 800 odd levels. A viewer named Vikas from Gurugram is holding 100 shares, but his buy price is 990 rupees. What will be your suggestion in this one? He can stay invested for a minimum of 1 year.
Again, this query could have very well been clubbed with the last one because the structure is very similar. Early this year, the stock started falling and has not seen any signs of recovery. A support zone comes in at 795, very close to the current levels right now. And despite being in the oversold territory for the last, let's say about 8 to 10 sessions, there hasn't been a meaningful bounce. So if at all it's a little painful to book profits right away, I think hold with a stop loss of 790. If that is taken out, you must exit out of this.
Ashish, coming to you, this one is coming from Arjun. He's writing to us from Gurgaon, and we've not been able to take his query for a while. Apologies for that, Arjun. And he's holding 820 shares of Strides Pharma at levels of 660 rupees per share for the last 7 years, Ashish. He wants to know whether he should stay put with Strides Pharma or look to invest somewhere else altogether. And if yes, and if you are advising instead that he should look to exit out of Strides Pharma, do you think Geo Financial makes sense for the next 4 to 5 years?
See, again, thing is, companies like in pharma particularly, they are slightly more defensive. And Stride is still, after a long underperformance, has given very good return this year. From almost 275, we have seen the stock almost 835. So the kind of returns generated by Stride in this year is humongous, looking at other pharma counters. And again, a turnaround case from losses, a company again back into profit in the last quarter and continue to do well. So, in my view, if we these are both different sectors where Geo Financial Services operate as more NBFC or investing company besides Stride Pharma, which is doing pharma business. So, my suggestion will be to remain invested in a Stride Pharma. My target for this stock is 1,000 rupees in this year. And if you're having surplus fund, gradually you can start accumulating Geo Financial, but don't sell Stride and buy Geo, is my call.
Strides having 1,000 rupees the target for this particular year, so have your eyes on that. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back to take more of your stock-related queries. Welcome back to Buy Now Sell Now show, where we get you answers for all your stock related queries. And continuing the same, Ashish, coming to you to have your take on IFL Finance, because Sandeep from Lucknow wants to know that after the fall and after the RBI's action on this one, what's your take on IFL Finance? Because on the screen we can see that in the past 3 months, like literally a sharp fall of more than 40% is what we have seen on this counter. At this point in time, would you be a buyer at IFL Finance, or you would wait out to look out for more action here?
Wait now because April onwards there is going to be RBI special audit once again on the company. So till the time the fate is not known, I think those stocks which come into regulatory eyes, there won't be too many buyers at this price point. So my suggestion will be to stay out of it, and instead of this, Aditya Birla Capital or L&T Finance can be a bit better bet compared to IFL Finance.
Coming in from Indu, for you, Ashish, once again, e-mudra as well as scams. She wants to know, are these both of them good counters for someone to hold in the portfolio for the longer term? What's your take?
Seen very robust run up in e-mudra. In fact, the stock was near 50 to week high recently, and some correction we are witnessing today. So, in my view, if you are a long-term investor, you can continue to remain invested because we have seen good amount of buying happening in BSE, CDSN, and CAN. So, e-mudra is also fall in that category, and some portfolio churning is also happening from NBFCs to this kind of companies. So my suggestion will be to stay invested, and in fact, any investor want to re-enter into e-mudra, if you have missed it, then 700 will be a good entry price point.
So, Ashish, basically, Indu is looking to invest in both of them. That's e-mudra as well as scams for the long term. So, you think it's advisable to look at both of them for the long term, and worth it or fundamentally to be that these are a part of the portfolio?
As far as e-mudra is concerned, as I told you, it's around 700 rupees price. You can just wait because it has moved vertically in last couple of days. So some profit taking is happening. And as far as camps is concerned, it is just 200 rupees away from 50 to week high. But in my view, 2,900 will be a good entry point in camps. My target for this stock is again 3,500 to 3,600 in short term.
All right, Kush, coming to you for the next query. This one is from Dr. Subaya from Tamil Nadu, and he has a couple of queries. Firstly, is on Persistent Systems, where he's holding 43 shares from a price of 6,900 rupees, and he also has 400 shares of Granules India, and his buy price is 405. What's your advice in both of these stocks? Persistent, he's at a profit, and what's the take on Granules India? Good time to move out of this one or stay invested?
Both of them are a hold. If you see, Persistent has been under a bit of a pressure along with the entire IT pack. The mid cap IT names have also seen a bit of a correction, but this has been a rank outperformer in that space, and I think it will once again start taking leadership once the dust settles. So I think Persistent is a hold. If he is looking for a stop loss, then I think a positional stop loss comes in at 7,900 for Persistent. Granules also sharp profit booking, but the recovery also has been equally sharper. I think here too he can continue to hold. Let the buy price act as a trailing stop loss here. On the upside, the stock could very well regain the 475 highs that it made recently, and head on further from there. So both the stocks are a hold at the current juncture.
This one's from Thomas from Chennai, and he's asking Ashish, in the Tata group of companies, which is the stock that he should look to bet on to play the semiconductor theme. He's asking, is Tata Tech the right counter to look at?
Tata Tech can be a good bet if you want to play semiconductor story, but in my view, it's slightly still time is there for the semiconductor plant because this is just the beginning, and we may see IPO of Tata Electronics, etc. also, which will be again a major shareholder in that venture. But if you're having long-term horizon of your investment, Tata Tech can be a good bet, slow and steady bet.
It could be a good bet for the long term. But moving on to the next query that I have, and this one is coming in on SBI. Kush, what will be your advice on SBI? K. Venu Gopal Reddy has been holding SBI from a price of 600 rupees. Would you advise to add more at this point in time or move out of this one?
No, continue to hold. I would have suggested, adding some more, but for the last couple of sessions, we've been seeing some sort of consolidation, so this could go either way. Hence, just wait a little bit more for adding some more. 750, 755 are the zones that we're looking at. If once that is taken out, then I think the upside momentum, will continue and perhaps be a good level to add some more. No harm in holding, at current levels. Banking stocks have been under pressure, but here too, we might see this one take the lead and pull up the entire banking sector plus the banking index also higher. So SBI hold, look to add more above 755.
All right, let's take this next query coming in from Rajendra Tyagi. This one is also for you, Kush. He has, or rather, he wants to buy NetWeb Technologies at the current rate of around 1600 or so. He wants to know what sort of a profit will he be able to make on this counter for a period of 3 to 6 months. That's his short term, and the long term, that is 1 year. So, what's the perspective for this counter? Should he look to buy NetWeb?
Well, rather nicely set up. The stocks actually regained the 20-day moving average in the last couple of sessions. Just about trading there today. I think, this stock could actually head further. I think the volatility is something that he'll have to factor in going forward. But from a target perspective, I think we're looking at 1850 as the first one. And once that is taken out, about 2000. So those are the two targets as per the timeframes that he's mentioned. A positional stop here comes in at about 1475. So after the correction and on the rebound, the risk reward ratio is quite favorable. So he can look to enter into this one, at the current level also, and keep the 1850 and 2000 levels in mind. Also the, stop losses that just mentioned.
On to the next one, and Ashish, what's your take on SANDA Technologies? Sanjay wants to know, is this the right time to buy this counter, maybe for the next 2 years time horizon? In the past 1 year or so, we have already seen phenomenal returns from SANDA Technologies. So what's your advice coming in?
This has given very good returns. If you see from 190, stock went up to 590 and still available at 490 rupees. So company is doing good. We have seen consistent 25, 27 crore kind of profit coming in from the company quarter over quarter. And in my view, this company, which is a niche play, will continue to do well. So remain invested in SANDA Technology, and target for next 6 months can be again 600 rupees once there's some more momentum in IT play.
So that's the take coming in on Tata Tech. On that note, we slip into a break in this edition of Buy Now Sell Now. When we come back, more stocks to discuss. Don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now. Let's continue taking all of his stock related queries. This one is coming from B. Murli. He's writing to us from Bangalore, and he wants to know whether he can buy Anand, Rathi or Angel One or Aditya Vision for a period of 1 year. But he's asking this query to you, Ashish. 1 year time frame, all three sector counters, at least two of them may be in similar sector, one totally out of the sector. What's your view on it? Which one should he look to buy for a period of 1 year? Ashish, I think you'll have to unmute. Yeah.
As far as my view is concerned, I'm very bullish on these two companies, Anand Rathi and Angel One, because the way wealth is being generated in India, these companies which are very focused on the work what they are doing, they'll continue to do well. So Anand Rathi Wealth is still, though stock has given excellent return, but in my view, this has full potential to even touch 4,500 mark in this year. As far as Angel One is concerned, their super app is getting very good traction, and they are putting a lot of advertisements in recent IPL, which will also help them to gain more clients. So both are in my buying radar, and 20 to 30% upside you can expect in this year in these two counters. Other reason is the stock not in my tracking list.
Ashish, once again coming to you because this one is on a basket of all these railway counters wherein Rita from Kolkata has an exposure to stocks like RVNL, IRFC, IRCTC, Rides, Titagar as well as Texmeco. So the list is long and she's highlighting that she's incurring loss in all of these counters given the recent volatility. So any stock that you would like to tell her to move out from, and any of the bets that you are the most positive on, what will be your advice for her?
These counters at loss at least, because again the fundamentals of these companies are quite robust. They are working mostly, government companies are working in monopoly kind of area, and companies like Tita, Railwagon, etc. are also doing well, and they are flush with orders for new railway wagons, etc. So only patience is the key that you need to just have for some more time, and I'm quite hopeful that you are going to see 50-week highs of these stocks maybe in next 3 to 4 months itself once this new government take charge. So don't sell any PSU stock is my mantra, and particularly railway stock also. No need to book any losses here.
With that, let's kickstart with the rapid fire. The first one is coming from Imran Alam, and this is on Lemon Tree Kush. He has about shares of Lemon Tree at the price of 145 rupees per share. He has a short-term view. Should he keep holding on to this or go ahead and book losses? 145 is the buy price.
Hold with a stop loss of 125.
Okay, Ashish Sri Krishna is having losses in ITI where he's having 300 shares from a price of 340 rupees. Should he go ahead and book loss or continue to hold on?
Like the underperformer in PSU back, so my suggestion will be to exit from this and switch to BDL, which can give you better return.
Alright, Sudha wants to know, Kush, after selling IFL Finance, I believe that's what she has in portfolio, does it make sense to buy Anand Raj or for the matter of fact Amber Enterprises right now?
Anand Raj is looking to make a comeback, so that is one stock that she can consider adding in the portfolio.
Okay, Kush, what will be advised on Phoenix Mills? Nachiket is having 10 shares from a price of 1,000 rupees and more than double his money in this one. Good to stay on or book profits at this point?
No, continue to hold on. Fairly strong chart structure, continue holding on.
Ashish, Sandeep wants to know, CESC is a good stock to look at for the long term?
All power stocks will do well. CSC, though slightly underperform, but going forward they will also start doing well.
Okay, Kush, what will be advised on Avenue Supermarts? Ved is having almost 11% profits in this one. Good time to book profits in this one or continue to hold on, and any targets that you are looking out for?
It'll be a good idea to book some profits from a short-term perspective. The stock's actually gone into a bit of an overbought territory, so might see some profit booking. So not a bad idea to take some money home.
All right, we have Kabita Das, who's actually invested in Suzlon at elevated levels of 47.9 to 8 rupees per share. Any scope of recovery is what Kabita wants to know, Kush.
Could be, but I think the waiting period here is going to extend for some time. 33 is a strong position stop loss that he should hold with. The waiting period here could be a little longer.
If I can squeeze in the last one, Ashish, what will be your advice on Andhra Sugars as well as Ganesh Housing? Anuradha wants to know, are they good bets for the next 3 to 5 years?
Stock, I'm not too gung-ho about this particular sector. The sugar is a avoid in my view. Ganesh Housing, being an Ahmedabad-based dominant player in housing, will continue to do well. So Ganesh, you can remain invested for next 5 years.
All right, and with that, we come to the end of the rapid fire as well as queries. Thank you so much, Kush, as well as Ashish, for joining us on the show, resolving all of our viewers' stock-related queries. And viewers, as we wind down on this edition of Buy Now, Sell Now, it's time for Srishti and myself to say goodbye. But before that, we are approaching the financial year end. What are the moves that you all should make in order to do the right set of tax-saving mechanism? My colleague Snehi caught up with Nehal Mohta, who is the co-founder and CEO at Finovate Financial Services, as well as she spoke to Firoz Aziz of Anand Rathi Wealth to understand what should viewers or what should you do to make the best way of saving your taxes.
Nehal, your next step is to make use of fuel and travel purchases. So in terms of tax saving strategies, how can individuals make the most out of fuel and travel expenses? And give us an approximation, how much can one save annually through this approach?
So in fuel and travel, there are two categories in which we need to look at it. One is that you have a desk job and you're only traveling from your home to the workplace, and then there is not much travel. In this case, you can get an exemption of up to 2400 rupees on an upper end. But again, there has to be a supporting in case if your travel between the home and workplace is only costing you say 1000 or 1500. So either it is actual or capped at 2400 for people who have desk jobs. Now for people who are in marketing profile or sales profile, or who are in like senior management and who travel very often.
The EPF is 8% plus. Employee Provident Fund has two kinds of contributions. So like if you're employed with the channel, you will have employee contribution to Employee Provident Fund, employees contribution to Employee Provident Fund.
Right.
This employer's contribution, which is the company's contribution, has a limit of 7.5 lakhs per financial year, which is going to be tax exempt.
Right.
That's a large limit. From your side, whatever you contribute before it hits your bank account, you've already contributed. If you see your salary slip, you will see a split of your contribution to EPF.
Right.
That is counted under the 1.5 lakh ATC limit.
Okay.
So employer's contribution has a separate limit of 7.5 lakhs, which is a very generous limit. And your contribution is counted in the 1.5 lakh. If your salaries itself, if you sum up of 12 months, your EPFO contribution is already 1.5 lakhs. You don't have to volunteer to put PF or ELSS for that matter.